MCX and CNBC TV18 present Commodity Classroom, accessing commodity markets through institutional participants.
Hello and a very warm welcome to Commodity Classroom, brought to you by MCX and CNBC TV18. Well, the commodity markets through institutional participants is what the theme is of the conversation today. It has been a long and eventful journey for the commodity markets, and we finally see commodities come into the mainstream where the institutional investors and participants also are looking at commodities. Well, you have to have commodities in your portfolio, and you have to have a short-term and a longer-term vision for this as well. In 2020, in this year, we have seen commodity markets actually come a full circle. There has been very strong gains in many of the commodities. We've seen all-time highs in gold. We've seen crude oil prices come from a negative to a very strong gain right now. And many of the base metal prices and agricultural commodities as well have performed very well. So how do you understand commodities? How much of it should be a part of your portfolio is what is up for discussion today. Let's get in our panel then. Joining us on the show are Rishi Nathani. He's Head Business Development and Marketing at MCX. We also have with us Vikram Dhawan, who is from Nippon AMC. Aurobind Gayan is from Tata Asset Management. Umang Papneja is from IFL Wealth Management. We also have with us Mr. Ramesh Warkhedekar. He's from ICICI Securities Limited. Gentlemen, thank you so much for joining us. Rishi, let's begin with you first. And as we look at new institutional participation coming in for the commodity derivative market, and we've been talking about this for years now, what is your sense on what new participation, liquidity, or credibility will it bring to the platform?
Actually, institutional participation is very important in any market. If you see the advent of any market and its growth, it's actually started with institutional participation. Now in India, unfortunately, because of historical reasons, we had institutional participants coming into the commodity markets very late. However, better late than never. And now we are really looking forward to these institutional participants because one, they add liquidity, depth, and credibility to the market. And if you see that there are a lot of people who want to hedge and there are a lot of latent hedgers in the market. However, since there is no major long side to act as a counterbalance from the institutional participants, you see that a lot of hedging cannot happen or maybe moves abroad. So once the long-term money is there through the institutional participants in the Indian commodity markets, then you will see a lot of hedging side also coming from the corporates, and you will see a lot of more liquidity and depth in these markets, and these markets will become much more vibrant.
Well, absolutely. While we have been waiting for this participation to come, the opportunities are huge in this market here. Aurobind, we've spoken to you earlier as well on the panel otherwise, and as we discussed earlier too, that gold until now was the only permissible commodity when it came to institutions, and that too was via ETF. As new commodities are allowed and you have a fund which actually offers non-agro, agro, both of these as a mix, what has been your sense of feedback? And do you think the actual target audience that you were trying to reach out to is now a part and parcel of this?
I'm sure we have been having discussion on this for several occasions in the media. And we were the first one to launch multi-asset fund having commodities derivatives. I think a very important point that we have been talking to our investors across during our product was launched was that when we talk about commodities, it is not about only gold, and there are other commodities beyond gold also. We look at silver today, we look at industrial metals today, we look at energy products, and also more of agriculture commodities. So I think from the perspective of diversification, it is a new era that has come up to the Indian commodities market, and by having mutual funds and institutional participation getting into this market, I think it's a big change to the commodities market. And from the investors' point of view, as I said earlier, also diversification has been the major key for investors, because if you look at any sort of mutual fund schemes, it was all about equity, debt, and mostly to the gold. But now it's not just about gold, and there are other commodities to look at it, and that creates a healthy diversified portfolio to look at it as a best portfolio in the kitty.
Sure is. Vikram, I remember a conversation with you earlier also, again on TV, where you'd mentioned on this that these are exciting times and that you are looking at existing investors who already deal in other asset classes to include commodity in their portfolio as well. So what really has been the feedback there, and are you looking at an increase in numbers right
now? In terms of response from the investors, obviously, there is a very strong attachment to gold in this market, and we consume roughly about 3-4 lakh crores worth of gold and silver, out of which about 10-20% is purely investment. So the gold ETFs, as much as we are seeing good flows, we have not even scratched the surface for gold. So I would like to say that gold will still remain a major driver for the AMCs in the near to medium future. But I think longer term story, if you look beyond the near term horizon, we are services powerhouse, but we are not a commodity powerhouse. And if you really want to become a $5 trillion, $6 trillion economy, or a country which has got dominant influence over the global economy, then I think you need to have either access to commodity assets across the world, or at least you need very vibrant commodity markets in the country. So, and from the investor point of view, it is not just portfolio diversification; it is strategic also. I mean, today, if the crude oil prices go up, where do you hedge yourself as a mutual fund investors? I mean, not everybody can go and buy futures and options in the commodity exchanges. So I think this story will I think open up. As of now, I think the focus should be on getting the Indian markets par with their international peers, and providing the opportunity and the option to Indian investors. And I think it'll only get bigger and better from here.
So let me take a step back, and Rishi, let me put to you on what Vikram really said, that yes, the markets are opening up and we're all excited as stakeholders into this space, but a lot needs to be done. And if you compare it with the global numbers, we perhaps are a minuscule fraction percentage there. What are you looking forward from here? What is the exchange looking to do from here?
So Manisha, actually we just started. And many times as I say that people say that globally commodity markets are so large, and why are they not so large in India? Equity markets are larger. And I just tell them one thing, that we are 10 years behind the equity markets in terms of electronic commodity exchanges. So give us 10 years and see where we are. And I don't think we'll have arithmetic growth. I think we'll have geometric growth in the commodity markets going forward.
Umang, let me come to you, and thank you for joining us today. What is your sense really when it comes to commodities? Because, a lot of people perhaps understand equities, even if they do not. It's been around for a longer time than what commodities have done. So there is that much more familiarity perhaps with commodities. With equities, what is your sense on people now exploring commodities? Do you see more and more investors come in, ask questions? Are there those first conversations happening here?
Sure. So I'll just take a step back, Manisha. So first, let me go back to what happened in 2017, where there was some kind of mutual fund reclassification which SEBI did. I think that was the first step which allowed the entry of asset allocation funds. Then institutional participation was allowed in the form of first PMS, AIFs, and now mutual funds as well. Now, if you combine both the steps and look at what is happening, at least in the wealth management and HNI portfolios, people have started looking at this asset class. So now when you look at asset allocation particularly, and you say that you have to go beyond equities and debt, you can also add commodities, you can also add other asset classes like REITs and InvITs. Then things start making a lot of interest for clients, plus the mutual fund tax wrapper, because the moment you come into mutual funds, the taxation is much more beneficial than what you would normally do. So that is one. Second, I think what it will also happen is there was a huge, what happened was the cash settlement in terms of the indices which have been launched by MCX. So whether you look at bullion or you look at metal dex, I think the cash settlement also was a very, very key, step. Now, that is very important for institutions to come in. This will also allow innovation like structured products. So, for instance, if you want to play gold and silver participation, or you want to just play base metals participation, I think that will happen. So, all of this put together will create a lot of interest as you go on with clients, which which was your question.
Let's also invite Ramesh on then. Ramesh, hi. What has been your sense? You heard the other panelists as well. What are your initial comments when it comes to institutional investing, participating in case of commodity?
Yeah, there have been a lot of changes, Manisha. Coming to banking front, which is one of the institutional participant into this. Banks were allowed to participate in commodities till 2007, 2008, and then there were restrictions from RBI. But post 2015, FMC merging into SEBI, and 2017-18 allowing bank brokers to participate into these markets. I believe there's a humongous opportunity because there are so many customers who have been trading with the bank brokers and they never had an opportunity to participate into commodities markets. So now with bank brokers being allowed to participate into commodities, I'm sure there's a lot of these customers who can onboard, and they've been only trading into equities and debt market, and now they can take advantage of this time till 11:30, 11:55, and also participate into commodity markets.
Ramesh, how would you, we've already spoken to all of you, and the initial comments are in now on what these markets can do and how much can they open up. But what is desired from here, Ramesh? What is the suggestion that you would want to give to the exchange and to the regulator as well when you want to have commodities included in a portfolio?
One of the most important things is far dated contracts. Currently, if at all you look at the exchange, what is liquid is current month and a little bit in the second month. But when you want all those corporates or any of those institutions to come on board, we want contracts which are long dated contracts also to be liquid. So that's one thing. Second thing is recently indices has been launched. I am sure with lots of knowledge dissemination which will happen on indices, there'll be more participants who will come on. So these are the two things. One is far-dated contracts and more liquidity into indices so that retail participants can also participate into these markets.
Rishi, how will you respond to this? Because this is a long-standing thing. Even from the retail participants, we've had these queries come in.
So first, the Bulldex and Metaldex which we've launched are actually meant for institutional participants, hedgers, and retail who do not want to give and take delivery. It's a ready-made portfolio for any institutional investor to participate in. So that is one. Second, given that about long-dated contracts, so MCX on its own has taken that step to allow for 50% reduction in transaction charges for long-dated contracts. So we've done that, and it's already there.
But Arvinda, let me come to you. And the other conversation always has been. It's easier to look at gold, and then next comes the crude oil, where we've seen a huge volatility, perhaps the most volatile commodity or any asset classes that we've seen in this year, because it's been to negative and then positive. It has done a whole spectrum, 360 degrees this time around. But the agriculture space, and that is where a lot of investments is what we see globally by banks as well. I mean, you see those corn, soybean, sugar, rubber reports through, even as we are scratching the surface, as Rishi puts it. How have you seen the interest of investors who do not perhaps understand each of these individual commodities try and invest in a fund like yours?
As I said, I think having more commodities into the basket makes a lot of sense. I mean, of late, if we look at the oil seeds and oil complex, they have actually done fantastic last 2-3 months in terms of performance is concerned. Be it domestic factors or the global factors like Malaysia, Indonesia, tax structure changing. So I think being a fund manager, if one is able to understand those factors and factorize them into the portfolio and then have them as part of the portfolio, has actually been added a lot of advantage to the portfolio's performance. So I think it is not just about gold or silver. Having agriculture commodities into the portfolio is actually making a lot of sense.
Well, with that, let's go for a short break. As our experts have told you that institutional participation will bring in liquidity, credibility, and the much needed wider participation in for commodities. When we return back, we will have audience's questions as well lined up for you.
MCX and CNBC TV18 present Commodity Classroom, accessing commodity markets through institutional participants.
Welcome back to Commodity Classroom, where we are talking about accessing commodity markets through institutional participants. We will now have the audiences asking their questions, and our esteemed panel will answer them. I have a question now from Ayub Malik, who wants to know, and this one is to you, Rishi. He is asking if one can look at Bulldex and Metaldex as proxy to equity markets after 3:30 p.m. because what's happening in the global markets will continue to reflect here.
See, actually, a very interesting question, and I'll give the answer in perspective to the topic being discussed just before this, is that commodities are not only there for good times or bad times, they're there for all times. So, for example, if you're looking at economic uncertainty, then people want to move into gold as a safe haven or to silver, basically as bullion. And if you're looking at economic recovery, then you move to base metals because that's where you will gain most because of the economic recovery. So actually, the bull decks and metal decks could be used as a hedge against each other also, as well as if you're ideally if you're bullish the economy, if you are long stocks, you could also be bullish on the metal decks, or you could be short the bull decks, or vice versa. So basically, it gives you a very nice perspective. And the beauty of these indices is that number one, cash settled, and number two, they give you all the five base metals, the metal decks, and the bull decks gives you gold and silver. So you don't need to have multiple contracts. You can just enter into one contract. Lot sizes are smaller and very convenient and easy to access.
I think, Rishi, there's one more question coming your way, and this one is from Murlidhar, who wants to know if he wants to invest in silver and he has a demat account. What is the easiest way to start investing or trading in silver?
Okay, so your normal demat account, which you use for equities, will not work for commodity markets. You will have to open another account in a you will have to open a Commerce account, and then which is also like a demat account, and then you can have this. You can buy silver, and you can either take delivery, or you can take it in demat mode or physical mode. So you can roll over your position. So if you buy futures, so we have 30 kgs, we have 5 kgs, we have 1 kg. So you can buy the futures, and then if you want, you can take delivery, or if you want, you can keep rolling over your positions. And the delivery can also be in demat mode or in physical mode.
I also want to start taking your final comments onto this show. Vikram, I want to start with you. So yes, people want to invest in commodities. They are looking at the best ways of doing that as well. So what is available to them right now? What can we look forward in going future? And what are the kind of opportunities that you see when it comes to institutional investors and commodities together?
Sure. So in terms of opportunity, I'll throw a statistics at you. Today, the balanced or the multi-asset fund universe across the world is about $7 trillion. We talk about India, I mean, we have not even started if you look at the AUMs that we have in balanced and multi-asset funds. So assuming, as Rishi mentioned, we are 10 years behind the developed market. So we could have sort of an exponential growth towards that. So that, to my mind, will be a very strong, offering amongst the commodity products. Secondly, from the allocation point of view, I think instead of taking out a number of 5% or 10%, I think you should see that do you really need diversification in the portfolio? That's the question one. Are you already diversified? If you're not diversified, then the second question to ask is that how much, obviously you need diversification because there is volatility in the market in your portfolio. So how much commodities can add value to your portfolio, whether it is gold or crude or index or whatever it is?
Ramesh, do we ever move ahead of gold?
Yeah, the participation has been diverse now. It's not only gold that customers are looking at. They also look at natural gas, crude oil. There has been good participation in cotton and CPO. Maybe the percentage is less, but gradually the customers are looking at across all the products of commodities.
Umang, why don't you take this question, which is asked by Tejveer Solanki, who wants to know on what should be the ratio in equity, debt, and a commodity.
I'll just tell you a small anecdote, and this goes back to the time when I was getting married, which was around 18 years ago. Now, at that point in time, gold was 3,000. Sensex was 3,000, and the place where I live was also 3,000 per square feet. Right? So today you see that gold is much ahead in terms of final price 18 years later. But of course, it was not always the first amongst these three. So there are pluses and minuses which keep happening across asset classes. The key is to maintain your asset allocation. Keep kind of if something goes over your comfort zone, you just rebalance it back to your thought about asset allocation and continue. I think money is there as far as the economy keeps growing.
Aurobindo, to you then, and what are your final comments on how do you look at commodities penetrating in a larger way when it comes to institutions?
Investors will eventually understand that having more number of commodities as part of the basket or portfolio is actually going to add a lot of value to their portfolio return. So I think all looking good.
Rishi, your final comments.
It's human tendency to like anything tangible in commodities, especially tangible commodities like say real estate or gold are very dear to humans because of that aspect. But however, any market which has been financialized has grown very fast. So if you see equity markets saw the biggest boost in the end of the last decade of the last century because of dematerialization. And now with commodities having also being available in demat as well as physical, you have best of both worlds. So I believe that this financialization, the lending against ENWRs and dematerialization of commodities will lead to increased financialization of commodities and would spur the growth of commodity markets to a large extent. Another point I would like to say is especially internationally referenced commodities. They also, apart from helping you, in portfolio diversification or whatever returns they provide, they also give you a currency hedge. So if you're holding gold and even if the gold price internationally doesn't change, but the rupee depreciates against the dollar, then you will see your gold value going up. So actually you're getting an inbuilt hedge of currency when you buy internationally referenced commodities. And I would also like to say that many people have been asking what should be the ratio, what should be the ratio. I would say have a balanced diet, have your carbs, have your fats, have your proteins and everything. Don't just eat one thing, your growth will become lopsided. And to investors, I'd just like to say, be informed, be knowledgeable, have adequate research and then access markets, then it'll be a beautiful ride for you.
But with that, gentlemen, thank you so much for joining us today. Rishi, Vikram, Aurobindo, Umang and Ramesh, thank you so much for your time and thanking you, the audience as well, for listening to us, asking your questions. And with that, it's curtains down on this one. Thank you so much.
MCX and CNBC TV18 present Commodity Classroom, accessing commodity markets through institutional participants.
Focus, ideate, innovate, enable.